Is this week's banking crisis like 2008? That's a question many people are asking as we look at the failure of two US banks and worries about one massive European bank. CNN's Fear and Greed Index charts emotions in the market. And this sums it up really at the moment. Extreme fear. Former US Treasury Secretary Larry Summers has tried to calm the public.
I don't think this is a time for panic or alarm. This is not 2008, where people needed to be worried about whether they could get their money.
Well, here to talk us through that, CNN business correspondent Rahel Solomon joining me from New York. Thanks for joining us. It's almost worrying sometimes when everyone comes out, people like Larry Summers or even Biden saying, stay calm, everything's safe. It makes you think, is it safe?
Well, it almost has the opposite effect, right? To your point, Max, right? Stay calm makes you wonder, well, you know, what should I be worried about? But yes, I mean, to be clear, there are some pretty significant differences from 2008. Let's just start with the type of risk, for example, that SVB and Signature experienced. Really, depositors fleeing from the account, and so these banks having to sell treasuries at a loss, right? Which we've talked about a lot. 2008, what we saw with a lot of these banks were just essentially sitting on bad loans, bad credit loans. Another thing that's really important in the wake of 2008 is that many of these banks, certainly the largest banks, are well capitalized. They are subject to intense regulatory scrutiny, and we may perhaps see even more of that in terms of the smaller banks and the wake of what we're seeing. But Max, I think two things can be true. I think we could potentially still see some banks fall, potentially, and that also doesn't necessarily mean that we are on the cusp of a global banking crisis for some of those reasons that I've already discussed.
We've been talking a bit, haven't we, about bank runs. It could be argued, couldn't it, that very rich people are taking their money out of, some of these banks, but the wider public isn't. So the panic hasn't quite set in.
I think we're still waiting to see really what we're seeing with deposit inflows. We've certainly gotten some reporting that some of the major banks are seeing pretty significant inflows of money, that people are moving their banks or moving their deposits to some of the Bank of Americas, for example, the Citigroup. But I think we'll learn in the days to come how significant that really is. Part of the reason why, Max, though, we don't expect this to really take hold is because, of course, the FDIC here in the U.S. Insures almost most accounts, right, up to $250,000. And the average checking account, the average account in the U.S. is far less than that. So for most people, you are safe. I think what is really interesting to see as the dust settles and when the dust settles is, did the messages work, right? Did the Larry Summers of the world come out and who said, don't panic? Did that message really resonate? And I think we just won't fully know the answer to that until the dust is fully settled.
All of this goes back to interest rates rising faster than many in finance really expected. So a huge amount of pressure right now on the central bankers.
Absolutely. And you know what's interesting, Max? Some experts tell me it is what they do, but also perhaps more critically, what these central bankers say, right? I mean, messaging will be so important. For example, next week when we hear from Chair Powell on Wednesday of next week, what we hear in his statement and also how he responds in the press conference. And there is really fierce debate about the potential for a misstep. For example, Secretary Larry Summers saying last night on our CNN special that he believes it would be a serious mistake for Chairman Powell and the Federal Reserve to take their foot off the brake and stop raising rates, essentially because that could send the opposite message, right? That could send the message that they are so spooked about financial instability that they are willing to take their foot off the brake when, Max, as you know, just last week, Chair Powell testified on the U.S. Capitol Hill that more rates were to come. So it could potentially send the wrong message. That's why communication for these central bankers is so critically important right now when investors are clearly on edge. And you can argue that many people around the world are on edge. I mean, it certainly doesn't feel good to wake up and see your bank stock off 5% and perhaps even more.
It does seem, though, doesn't it, as if the system's improved and central bankers and other senior bankers have learned from 2008 because they've acted a lot more quickly this time round to reassure the markets when something's gone wrong.
I think that's a fantastic point. I think that's a fantastic point. I've heard it so many times over the last few days that one of the lessons that we learned from 2008, that regulators have learned from 2008, is that you have to step up very quickly, very aggressively to try to sort of put a limit around the collapse that we see, right? To try to prevent the contagion. And the extraordinary measures, quite honestly, that we saw from the U.S. government over the weekend, now from the Swiss National Bank, essentially saying that we will do what it takes to protect the financial community. When I ask experts, ultimately, what will it take to create some calm in the financial community, that is the one answer I hear time and time again, that these really bold declarative statements from governments that they will do all that is necessary to protect the financial community from further collapse, from further contagion. That is what's necessary right now and very important. And it's changed.